It's not necessarily about how much you make, but what you do with that money. So risk management's by far and away the most important thing. I was in a workshop where I was talking about margin, and one of the students that was in the workshop thought I was talking about butter.
Welcome back to the Millionaire Playbook, where we break down how to actually build wealth, take control of your life, and create opportunities on your own terms. Today's episode is a really, really good one. I'm so excited, especially if you've ever felt like investing or trading is something that's only for experts or people on Wall Street, like I did at one point. Today we have our guest Matt McGrath with us today. Thank you so much for joining
You're
us.
very welcome.
Matt is the director of Trade with the Pros here in Kansas City. He teaches people how to trade stocks, options, futures, and currencies, and more importantly, how to actually understand and manage their own investments. But what I found really interesting, Matt, like just researching and reading your bio, is that your journey from international relations to owning a business to transitioning into the world of investment specifically after the 2008 crash.
Yes, that was a
really
watershed
interesting.
moment for me.
Yes. So today we're going to break down what people get wrong about money, how to actually start building wealth, and what it really takes to reach financial freedom.
Awesome.
So Matt, I want to start by you telling your story, because I do feel like you have a very interesting one, especially with like traveling
Sure.
internationally to like different countries and then
Yeah.
more.
Yeah, so I grew up in Overland Park, Kansas, a suburb of Kansas City, Missouri, and was always interested in international relations. So I was a big public speaker in school and debate and extemporaneous speaking, but I developed an interest in international relations. So I went to college at American University, and that's where I studied international relations and studied abroad and visited many countries. I spent the most time in Vienna, Austria. So when I graduated from college, I became an international trade assistant at a large law firm in Washington, D.C., making $18,000 a year.
Wow. Was that a lot of money?
Oh,
now?
my
Because-
goodness, no. Just to give you an idea of how little money that is.
Okay.
Even back then, my
Mhm.
rent in Washington, D.C., I lived in Bethesda,
Oh,
Maryland.
okay. I'm
was-
familiar. I went to Howard
Yes.
University.
Oh,
so
nice,
yes,
nice.
yes.
So my rent for a one-bedroom apartment was $900 a month, and I made
Wow.
$1,500 a month, so that didn't leave a lot of discretionary income.
Wow. Yeah.
So that actually, you have a vision when you're a child of what a career would look like, and then when you actually experience that, sometimes it's not what you think it would be. And I'm gonna be honest with you, I found that career very boring. So
Okay.
what I envisioned international relations being when you actually work in that field was not very fulfilling. So I moved back to Kansas City and worked actually for a water treatment company and did very well in that career, sales career, and started my own company, built enough money to actually start my own. And then what led me into the trading world indirectly was IT. So if you remember in the 1990s is when the dot-com craze occurred. And I knew that that was taking off. So I sold my business and I became an IT recruiter. So I worked for a school that taught people IT fields like networking engineering, application development, web design, things like that. And I was very good at that as well. So I was number 2 in my field in the United States. And I made a lot of money in that career. But what led me to trading and investing was in that crash of 2008. Just in my 401k and IRA, I lost nearly half the account. And that was a lot of money. And that was really a watershed moment for me.
So how many are you, if you're comfortable, how exactly how much money was that?
That was hundreds of thousands of dollars.
Hundreds of thousands of dollars. Wow.
And again, we're all
Okay.
taught in this country since we're kids that the way that you make money investing is you max out your IRA contributions each year, you max out your 401k contributions each year, and then, of course, when we retire, we'll be wealthy. But again, what they don't tell us is that along the way, there's a lot of bumps, and 2008 was a big one. So between 2007 and 2008, the market was down 57%. And I had lots of friends who lost much more than I did. One friend who lost $7 million
Phew.
in her IRA, and she had one of the most well-known financial advisors out there.
Whew.
So the reason I wanted to learn how to invest actually had nothing to do with trading. That had never even hit my radar screen. I had no interest in trading at the time.
Mhm.
I just wanted to learn how to protect my long-term investments from that happening again,
Mhm.
which is what options are used for.
Mhm.
So I went to the only school in Kansas City that offered that type of training, went through their program. Well, because of my IT recruitment background,
Mhm.
the owner of that company asked if I would work there as a recruiter, and that's how I came to work for the company.
Wow. Okay, so walk me through that. So you lose hundreds of thousands of dollars after and everybody was going through it
Oh,
in
yes.
2008. People were losing their homes
Well,
left
you
and
know,
right.
with your real estate background, the
Right.
impact it had it
Oh yeah.
impacted everything, the credit
Yeah.
markets, real estate, but the average investor, I mean, just
Mhm.
lost a fortune that year.
Yeah. And so you joined this class. And so how long did it take you to start like actually trading and like putting into practice the things that you were learning?
So in my case, ironically, I started trading first. So
Okay.
when I came to a workshop, a seminar that they had at the school, like I said, I initially went there to learn how to protect and grow my long-term investments. But I was very intrigued by the strategy they taught for trading. And like I said, I had never even considered that before.
Mhm.
Trading is a very different activity than investing.
Mhm.
And the strategy that they taught in that workshop really resonated with me. So I actually did that first. I
Mhm.
actually opened up a little trading account, just put $5,000
Mhm.
into a futures trading account. And in my case, it took about 4 months of shadowing them, the trainers, as they were trading each day to where I started to get pretty good at it myself.
Mhm.
But that's when I started managing my IRA as well. But it's a very different activity than investing.
Yeah. So was it hard for you to learn? Like just being brand new into it, like,
You know, so many of the things that you
Mhm.
would think trading is not. So I was concerned when I started because math was always my worst subject in school.
Mhm.
I'm definitely not a left brain person. I'm totally right brain. And I thought thered be a lot of math involved. And as you know, with
Yeah.
your experience, there's
Yeah.
none. In
Yeah.
fact, the platforms today
Right.
do the math for you,
Right.
right?
Mhm.
So all the original fears I had about it never materialized. Again, I'm not sure exactly why, but I did not find the strategy to be that difficult.
Okay.
No.
Okay. So what when you were getting started, like at what point did you like how long did it take you to get into it and start doing it completely full time?
Well, again, full time when you're trading is not a lot of time. So again,
Right.
the
Right.
strategy that we
Depend on the strategy.
yes,
Yes.
the
Yeah.
strategy that
Mhm.
we teach and the
Yeah.
one that I use, even when you're new to this, it only takes an hour
Okay.
to go through the routine and set up your trades each day. You don't want to overtrade. I've found that people who spend a lot more time each day trading tend to do worse.
Mhm.
So we want to focus on quality over quantity, and
Mhm.
that's what we teach you to do. Again, that's in the beginning when you don't have the routine memorized. Once you have the routine memorized, believe it or not, it only takes 15 or 20 minutes.
Mhm.
So again, it's a full-time income, and I wouldn't call it a full-time job. I mean, the
Mhm.
main reason that people I found want to learn how to trade is it frees up their time to pursue their other passions.
Mhm.
We make our students, where I work now, we make our students create a trade plan. And the first part of the trade plan is your mission statement, where you spell out why it is that you're trading. Would you believe the number one reason that people do this is it frees up their time to spend with their family?
Hmm.
That is the
I
number
can
one
believe that.
reason
Yeah.
that people want to learn
Yeah.
to trade.
That's I mean, that's what it's all about for me, especially with like investing in things of that nature. And, just to disclose to the audience, like I also joined Trade with the Pros as well. And that was one of my reasons. I don't have a family, but it was more so just the freedom,
Right, and your
which is
other
what this
passions.
right, which is what
Yeah,
this
I've
is all
seen
about.
just about everything, but it's not to sit in front of a computer all day for 8 hours. We can
Mhm.
do that at a job, right?
Right.
Most students are trying to get away from that, and
Mhm.
what's appealing to them is it's not very time consuming.
Okay. So you join this program, you learn the strategy, you start trading, and you were making money, but were you still like running your business at the time?
Oh,
Like
no. So, well,
simultaneously? Okay.
that's when I went to work for the company.
Oh, okay.
So again,
Gotcha.
I'm the education director and
Mhm.
the director of the Kansas City location of Trade with the Pros,
Mhm.
which is a full-time job, but trade as well.
Okay. Okay. And so what are kind of like the outcomes that you see from students who join Trade with the Pros?
So most of the students who follow the rules, and that's what trading is all about, is following the rules,
Mhm.
do well. I mean, in terms of how much time that takes, it really varies dramatically. The soonest I've ever seen was 10 days.
Mhm.
Other students I've seen who never do well.
Yeah.
So again, it's all about just everything else in life.
Mhm.
It's about following the rules, but we teach a very specific 7-step routine if you're trading future stocks or options, and 9-step routine if you're trading forex currencies.
Mhm. Okay, and so I like what you mentioned, that, like, not following the rules, and I
Yes.
kind of I wanna kinda segue that, right, into, like, money and wealth mindset because that's what this show is all about, right? It's all
Exactly.
about building wealth. So, with that being said, I wanna know from you, like, what do you feel wealthy people understand about money that most people don't?
The number one thing I've discovered about wealthy people is they're very frugal.
Okay.
So it's not necessarily about how much you make, but what you do with that money.
Mhm.
I'm reading a great book right now called The Psychology
Mhm.
of Money by Morgan Housel.
Mhm.
Have you heard of that book
I've
before?
heard of it, yes, I
It's a
have not read it.
fantastic
Yeah.
book, but just one of the examples that he gives in the book is there were 2 gentlemen that died at the age of 92. One of them died with $8 million, and he left 2 million of it to his family, and then gave 6 million of it to the local hospital and library. He was a janitor for 17 years at J.C. Penney's,
Mm,
and before that worked at a gas station.
mm,
But he was very good and diligent about saving and investing, and what he did was he invested in blue chip companies for 30 years, and that money grew to that amount.
mhm.
Then he tells a story of another person who was a high-level executive at Merrill Lynch who made hundreds of millions of dollars, who at the same age died broke and bankrupt.
Mm.
This was a person that spent all of his money. He was spending $90,000 a month
A month?
just to maintain his home
Oh,
and an
no, yeah.
18,000 square foot home. So it's
That's
not
insane.
necessarily about what you earn. And I've noticed that in my industry as well. I have a lot of students I've worked with over the years in my career. A lot of them are very wealthy doctors or other professionals that earn hundreds of thousands of dollars a year. But you'd be amazed at how little money they have saved. It's not just about, again, what you earn, it's what you do with the money.
Mhm. And as that pertains to trading specifically, right? What are kinda like some strategies that you would recommend to
Sure.
people who are just getting started, who
Right.
may be just getting started?
There's a lot of different ways to make money in the markets. What they all have in common are three really important things. Number one, the most important thing when trading anything is using proper risk management. So in my career, I've met over 5,000 traders. And most retail traders understand that they're supposed to use proper risk management. But when you ask them exactly what they mean by that, they cannot tell you.
Mhm.
To some people, that just means putting a stop loss on your trade. To some people, that just means only risking a certain percentage of your account per trade. But there's much more involved in risk management than that. That's the number one most important thing in trading is using proper risk management. A professional trader, like a trader who works at a bank, they can tell you before they ever place that trade exactly how much they're going to make on the trade if they're right, and exactly how much they're going to lose on the trade if they're wrong. And they always make sure that they only take trades where the potential profit is greater than what they're risking if they're wrong. Okay,
Mhm.
so risk management's by far and away the most important thing. Number two is emotional discipline. Every
Mhm.
study that has ever been done on trading has shown that's either the most important or the second most important factor that determines whether you're successful or not. When you're in front of that screen trading real money,
Mhm.
your money, there's a lot of emotions that come into play. And they're all derivatives of fear and greed in some fashion or another.
Mm.
And in some way, you either need to gain the skills to become emotionally disciplined, or you need to remove emotions entirely from the equation. And there's ways to do that as well. And then, of course, the third most important thing is knowing how to identify good entries, where to enter a trade, buy, for example,
Mhm.
and how to identify good exits, where to exit the trade for a profit if you're right on the trade.
Okay.
Those are the three most important things in trading.
Wow, okay. And so do you, because I feel like when you're on the outside, right? Like me, for example, I came to Trade with the Pros after seeing like some of the marketing and I mentioned to you that I had a financial advisor. And I don't even know what she does, honestly,
Right.
because like the only time I hear from her is when I reach out to her and I'm like, hey, I want you to trade this thing. And I also feel like, with my background at Reuters, I didn't know much, but I was still kind of dabbling. But
Right.
what I kept hearing, and I feel like this is what a lot of, just people who have 9 to 5 jobs and are in their careers, is like, okay, invest in ETFs, invest in ETFs. What is your insight on that? Like, people who are just passively, investing in the stocks
Right.
through their 401ks
Well,
or
if you're
and not
not
managing it.
educated and you're just a normal retail investor, I mean, I think Warren Buffett's advice has always been the same, and that's just to invest in an index fund that follows the S&P 500, the 500 largest publicly traded companies in America. I don't know if you remember Warren Buffett's favorite or the famous bet that he made years ago, that $1 million bet. This may be
No,
before your time. You're
no.
much
What
younger
was
than I
that?
am.
Enlighten
So
me.
he bet a money manager $1 million
Mhm.
that the S&P 500 itself would outperform any managed fund that he chose. So he let this person choose any managed fund he wanted to,
Mhm.
and he bet the S&P 500 would outperform that. And Warren Buffett, of course, won the bet.
Right.
So
Okay.
his advice always to investors is if you're not going to get educated,
Mhm.
if you're not going to get trained, the best thing that you can do is just to invest in an index fund that tracks the market and hold that over time. But again, if you are willing to get trained and get educated, there's a lot of things that you can do to tweak that to get better than average returns.
And is that something you would recommend just with your experience? Because that's what
Oh,
you were doing as
absolutely.
well.
Like I said, the
Mhm.
problem, even if you'd held the S&P 500 exchange traded fund during the crash of 2008, is
Mhm.
you'd have still lost almost half your account in 1 year.
Mm.
So what I learned and was shocked to learn when I got into this industry is that there are protections that you can put in place in your account to prevent it from going down. And that's what's called a put option. So
Okay.
that's the reason options were actually created on Wall Street years ago, was not to trade.
Mhm.
They were created to protect your long-term investments. And this sounds very complicated, but it's actually very easy. So if you're holding a stock or an exchange traded fund, the risk, of course, associated with that is sometimes the market goes down,
Mhm.
like we've seen in the last 2 weeks. We just
Mhm.
went through a correction, right?
Mhm.
Or the crash of 2022. And then it takes a few months or even years, like in 2008, to get back to even. So that's the problem with just holding anything, right? But you can place put options on those stocks or exchange traded funds, which protects the overall account from going down. So what happens if there is a crash or correction? As the value of your ETF or stock goes down, the value of your put options is going up. You're betting against the market.
Mhm.
So it acts as a hedge. So I
Okay.
was just stunned when I entered this industry that there were ways to do things like that.
Mhm.
When I thought of options, and again, I had no knowledge before I got into this industry, they seemed very complicated. I heard people talking about straddles and strangles and all these things that you could do with options.
Mhm.
I never realized that it was simple as that. If you're just trying to protect an investment, you just buy a put option.
Okay. Okay. No, I love that. And with that being said, like, just kind of zooming out a little bit. So what is the mind shift that is most important when it comes to building wealth?
um, Number one,
Mhm.
huge myth among most investors is they believe that investing in the stock market is a way to become wealthy. And in reality, that's not very true. If you
Mhm.
think about the people that you know in your life who've become wealthy, most of them did not get wealthy by investing in the stock market. Now, you have to put your money somewhere, and over time, stocks tend to do better than bonds, right?
Mhm.
Or other investment vehicles. But most people don't get wealthy
Mhm.
from investing. Most people get wealthy actually by being self-employed. They start their own business or commission salespeople. Do you
Mhm.
remember that book? And again, this may be before your time, The Millionaire Next Door.
I've heard, so that's another popular one that I have
Oh, it's
heard of for
incredible. It's
sure.
probably the most comprehensive study that's ever been done on millionaires in America.
Mhm.
And I believe the author's name was Thomas Stanley, but it was such a revealing book. So many of the misconceptions that we have about wealthy people, like I used to think that most people who were millionaires
Mhm.
inherited the money. right?
Yeah.
They were born on third base, right? They already
Right.
had a silver spoon in their mouth. That's how they got wealthy. Would you believe only 20% of millionaires in this country inherited the money?
Mm,
80% are self-made
really?
millionaires. And the most common fields that they're in is they're self-employed. They want to control their own time. And they're salespeople. Those are the two demographics that typically become millionaires. But that was a big myth that I had had, or a big
Mhm.
misconception that I had had.
Mm.
But a very revealing book. And as I mentioned earlier, they're very frugal. They don't spend a lot of money.
Mhm.
Most of them, if you met them, you would not believe they were millionaires. They
Mm.
drive very inexpensive cars. They live in a house below their means. They're big time savers.
Hmm. Hey, you're adding some. So I like to listen to Audible, audiobooks while I'm driving, like in traffic. Is that
Right.
that's my thing. So you're adding some books to my
Oh,
list.
that's a
Yeah.
favorite one of mine, The Millionaire
Yeah.
Next Door.
Yeah. I that is a very popular one that I keep hearing about. So I'll add that to my list. So and I wanna kinda, like, demystify trading because it is a very intimidating thing. Like, even
Oh,
me being in Trade with the Pros, it feels like I'm learning a new
yeah,
language,
it is, and that's
And
what I
it
like in it too. It is like
Yeah.
learning a new language.
Yeah, and so is trading for, those listening, right, who may find it very intimidating as well or don't necessarily know where to start, would you say that trading is something that the average person can realistically learn?
The average person definitely can learn it, right?
Mhm.
We have a saying in trading that it's very simple, but it's not easy. The reason it's not easy is because emotions come into play.
Mm.
But I will tell you, and if you remember from the initial workshop that you attended that I
Mhm.
taught, the
Mhm.
very first thing I go into is there's 5 things you absolutely have to have if you even want to consider entering this world of trading. Remember, depending on what study you listen to, between 90 and 99% of retail traders lose money,
Mhm.
and 70% lose their whole account. So this is a very serious field you're getting into.
Mhm.
And the only people who make money trading are trained, educated traders who follow a rules-based system. So some of the more common things that are common among the public that would not make it a good fit for them is number one, you have to have money.
Mhm.
You know, once you are trained and educated and you've practiced and you've confirmed that you're good at this, you're going to need to open up an account. And I meet a lot of people that are undercapitalized. They don't have enough money to trade. How many people do you know that have opened up these Robinhood accounts that have just $100 or $200 in the
Right.
account, and you can't make any money
Right.
off an account like that? So
Yeah.
we recommend you have at least $2,000. That would give you enough money to trade assets and use proper risk management.
Mhm.
You need to have the time to trade. So not only the time for trading itself, which takes about an hour, but the time to get educated, right? And as you
Mhm.
know from this journey that you've been through,
Yes.
you're a very busy person.
Yes.
You have to have the time to actually
Mhm.
go through those classes and get mentoring from a
Mhm.
mentor,
Mhm.
things like that.
Mhm.
As I mentioned earlier, you have to be emotionally disciplined, right? Again, every study that's been done on trading has shown that's the most important factor. You also need to have the aptitude to learn it. I'll be honest with you.
Mhm.
I meet a lot of students that are not inclined personally in finance. They're not interested in it.
Mhm.
So, a very good example recently, I was in a workshop where I was talking about margin, right? And one of the students that was in the workshop thought I was talking about butter.
Wait,
This
hold
is a
on.
true
That
story.
is
That
so
right.
did they not
Some
mention
people,
that?
again, are just not cut out for finance, and that's
Yeah.
okay. I could give you 100 fields that I'm not cut out for,
But did they
that I'm
disclose
totally
that?
well,
Because you could
again,
have that could
I
have
mean,
been easily
I
okay.
explained in detail what
Okay.
margin was,
Okay.
that,
Oh my
and
goodness.
again, they still thought I was talking about, but and that's okay. So again, you need to be interested in trading. Some
Mhm.
people come into this for one reason only, and that's to make money,
Mhm.
and they want to get rich quick. And I was going to tell you that's not going to happen. I tell everybody that if you're going to be an uneducated trader and speculate and gamble, your odds are actually much better at the casino. If you go to the casino and just play basic strategy and blackjack or craps, at least you're close to 50%
Mhm.
accuracy. If you go into these markets, futures, options, cryptocurrencies, it's someone without a strategy and a rules-based trading system, you're going to lose your entire account. And 70% do.
Yeah. Yeah, and that's I you so the first thing you mentioned when you were giving us that list just now was money, right?
Yes.
And I feel like just being in this world, one thing that I've learned that was really interesting to me is that are actually programs where you can trade with other people's money. So
Absolutely.
can you talk about that? Because I feel like
Absolutely.
not a lot of people know that that exists.
Yeah, they're
And
called prop firms,
the
by the way.
risk, and I want you to talk about the risk because
Yes.
I've also have learned talking to other traders that, if you don't know what you're doing,
Sure.
you know.
So they're called prop firms, and they traditionally provide the capital for undercapitalized students for them to trade from in exchange for a percentage of the profits. Now, we have a prop firm because our parent company is an actual broker. We do have the ability to fund our students' accounts. So, what does that mean? If they end up trading futures, we give them 50,000 in buying power. If they trade stocks or options, we give them $25,000. Why would we do that? Because again, we take 20% of the profits each month, but it's a huge help for students who are undercapitalized. Now, 80% of our students do not use the prop firm. They actually have plenty of money to trade, but for mostly younger students who are undercapitalized, it's a huge help.
Yeah. And OPM, like, I feel like that is just such OPM, other people's money. I haven't done that, like, in the world of, like, trading because 'cause I'm just getting started, like, starting off with futures, but I know that that's huge in the world of real estate, and when I'm educating people, people are like, "How are you doing this?" And so leveraging OPM, like, what is your thought process on
That's
that?
what
Some
leverage
people
is.
agree, some people don't,
Well, I
some
mean, in the
people,
world of trading,
Mhm.
again, unless you have a very large account of over $1 million, you're probably going to be trading leveraged assets. So, just for people that have never traded before, for example, in the futures market, futures are leveraged 20 to 30 to 1, depending on what future you're trading. What does that mean? That means you have 20 to 30 times the buying power you would trading a stock.
Mm.
So, for example, if you started with a $5,000 futures account, that would be the equivalent of you starting with $100 to $150,000 stock account, which you can make money from.
Mhm.
But if you're starting with, a $5,000 stock account where there is no leverage, it's very difficult to make any money.
Mhm.
And many people, like I said, with these newer platforms like Robinhood and Webull and so on, are starting with even less than that. I
Mhm.
mean, just for the experience you've had so far,
Yeah.
can you imagine trading from a $200 stock account through
No, I
Robinhood
could
or
not.
Webull?
I could not.
How could you possibly make any
But if
money?
you were to catch me 4 years ago where I knew nothing and I was, like, still, like, having a financial advisor invest for me and I'm just listening to the hype,
Right.
really, I wouldn't have known any different,
Oh,
you
of
know what I
course
mean?
not.
So that education piece is huge. But can you talk about, like, what are the risks that are associated with prop firms?
Well, number one, most prop firms,
Mhm.
their entire business model is actually for you to fail. So only
Mm.
1 or 2% of the people who pay to get into that program even qualify to get into the real money. So they make you pass all of these challenges
Mhm.
to get into their funded trading account. What's unique about Trade with the Pros, and the reason is ours is called instant funding, is because we have trained you first and we go a step further and allow you to shadow our best trader of that asset as they're trading each day. Ours does not have challenges.
Mhm.
So they allow you straight into that money once we have trained you. We even start paying you when you're practicing on simulator.
Mhm.
But again, it's a totally different business model. At Trade with the Pros, we focus on the education first.
Mhm.
And by the way, if you want us to fund your account, we can do that for you. Traditional prop firms, there is no education. They're just banking on the fact that you think the reason you can't make money trading is you don't have enough money. And
Mhm.
that's not the reason most traders lose money. It has nothing to do with the fact they don't have enough money. It's that they don't know what they're doing. It's
Mhm.
total speculation.
And your thoughts, just curious, because even when I was just kinda getting my feet wet, like, I'm watching YouTubers, and
Oh my
it's
goodness.
so many
We call that
YouTubers.
YouTube University.
YouTube Univer Yeah, we do too. So, like, do you have, like, an opinion on those or,
Oh,
like, what
absolutely.
Okay,
I can just tell you, like I
okay.
said, I've done this a long time. I've met over 5,000 traders just in the local market here in Kansas City. I've never met anyone who trades consistently profitably who learned to trade on YouTube. No one. And as you know, just having gotten into this, trading is such a hands-on skill set. You have to have someone who takes you under their wing and shows you what it is that they're doing and is available to answer questions. I'll never forget when I first got involved in this, one of my favorite YouTube channels I was watching on trading,
Mhm.
and I was actually taking their trades and
Mm.
losing money like most traders do. I found out later he was 14 years old
14.
and was living in
Wait a
his
minute.
mother's basement, and he wasn't even trading from a real account. And I was following this person for months. You have no
Whoa.
idea who these people are. And
Yeah.
when someone is offering free trading advice on YouTube, you have to question the motive of why it is exactly that they're doing this. Why aren't they just trading themselves if they're that good at trading? Why are they offering all this free advice? And there's usually some underlying motive, some reason that they do that. But I
Mhm.
personally, and again, there may be someone out there, but I have not met anyone who learned to trade professionally and consistently profitably who learned from YouTube.
Interesting. Yeah, and one of the things that I've been, like, loving going to trade, because I like you mentioned, it takes time, and I think, myself and my brother who joined the program with me, it just, like, hit us really hard because we thought it was gonna be easy to do, and it's like, I think for me, I've been just, like, hit with that realization, like, I'm gonna just show up. Imma just show up, and I'm gonna just keep trying and keep learning, and it's like the more I'm immersed in it, the more I start to understand and things of that
Absolutely.
nature. And so the other day, I showed up to Trader Tuesdays, and I was talking to this investor who had this really interesting strategy that I would love for you to, like, give insight on,
Interesting.
especially because, when you got started, like, the 2008 crash was really kind of like what pushed you to to
Yes.
to start learning more. So an interesting strategy that he mentioned to me was basically investing in stocks that pay dividends for companies that you have bills with. And I guess he stated, so what, and again, I would love to hear your advice or your opinion on this, but he basically said for example, his electricity bill, Evergy, like
Right.
apparently they pay dividends. And
Yes.
so he was stating that like he just invested in enough stock with them that all with his dividend payments, it takes care of his electricity bill.
Sure.
What's your thought about that strategy?
Well, one, and by the way, I'm
Mhm,
not a financial advisor and I'm
mhm.
not licensed to give any advice on any stock tips. So, again, I'm
Yes.
a recruiter at a
Yeah.
school that teaches people how to trade.
Yes.
My personal opinion, um, one of the problems with investing in dividend paying stocks is the reason they offer a dividend typically is the underlying stock does not perform too well.
Mm,
That's why the company offers a dividend to
that's
begin with.
interesting. Okay.
Yes. Again, depending on how much money you have invested, a great dividend could be 4%, right? With an energy company.
Mhm,
Well, if you have $1 million account, absolutely
mhm.
that I would think that that would be a great strategy. But again, my experience with most students is they don't have that size of an account.
Right.
So I personally have never used a strategy where I've invested in dividend paying stocks. And also, if the company does offer a high dividend,
Mhm.
you need to watch out.
Yes.
Companies that offer a very high dividend, there's a reason they're doing that as well. And those are
Mm.
not very stable companies.
Okay, okay. And so and starting out too, because I didn't realize that there were so many different things you could trade. Like we always hear about, I hear about crypto. I feel like it's a buzzword these days.
Right.
Stocks, obviously. I have heard a little bit about options, but one thing that I was like very intrigued by when going to the Trade with the Pros workshop was learning about futures. So
Yes.
so I want you to just kind of list like the different things you can
Absolutely.
invest in and just kind of for our audience members, who are interested in this or, thinking about getting started, like what those options are and what each one does. Because I
Absolutely.
didn't understand that.
Right.
So,
So you have to understand there's a difference between trading and investing. So again, when we're trading, we're typically going into the markets frequently, either daily, weekly, or monthly, and we're usually trying to generate income from that activity or just grow the trading account.
mhm,
Whereas when we're investing, we're typically holding assets for some length of time, at least a month, all the way up to years. So common assets that you would invest in would be things like stocks, or as you'd mentioned earlier, exchange traded funds or bonds or CDs and so on, more conservative investments. The problem, though, with trading those assets is they move way too slowly. So, an average trader who's trained is going to be looking for trades that offer at least a 2-to-1 or a 3-to-1 reward risk ratio.
And what's that?
Okay,
Can you
so
break that down?
as I mentioned at the very beginning,
Mhm.
professional traders know before they place the trade how much they're going to make if they're right and how much they're going to lose if they're wrong. And they only take trades where the potential profit is greater than what they're risking on the trade if they're wrong. So, like a 2-to-1 trade would be one where the profit potential is 2 times the amount of money you're risking. A 3-to-1 is where the profit potential is 3 times what it is you're risking. Well, the problem with trading stocks, exchange traded funds, and even options to a certain degree is they move very slowly. So you
Mhm.
would have to keep the trade open for 2 weeks on average
Mhm.
to hit that type of target, one that pays 2 or 3-to-1. Because futures and Forex and cryptocurrencies are leveraged assets, they move much more quickly,
Mhm.
and those trades are done in a very short time frame. So they make better trading vehicles. Like in the futures market, if you're targeting a 3-to-1 reward risk ratio, that trade is always done the same day that you place it, and usually in less than 30 minutes. So they make very good daily income vehicles. I
Mhm.
didn't even know what a future was
I didn't
17
either.
years ago. When I thought of futures, I thought of pork bellies and orange juice
Okay.
because of that movie Trading Places. Again, that
Yeah,
may be before your time.
but I'm familiar, yes, yes.
So most people associate futures with commodities,
Mhm.
and those are futures, but there's 3 other types of futures. There are stock index futures, where you're trading the Dow Jones or the S&P or the Russell or the Nasdaq. There's bond futures, like the 30-year Treasury and the 10-year note and the 5-year note. And then there's 8 major currency futures. And that's one of the things I love about futures. That's actually my favorite benefit of futures is that you can trade anything. You can
Mhm.
trade stocks, bonds, currencies, and commodities.
Except onions.
Yes, not onions.
Except onions.
Yes.
That's a very I don't even wanna go down that rabbit hole, but I
Yes.
definitely learned that the only thing you cannot trade futures in is onions, and it's so random. So go look that up and do
Yes.
your research on that, but yes.
But the charts work exactly the same as the other assets. So if I were to pull up a chart of a stock right now, like NVIDIA, and then pull up a chart of the coffee future, if I told you one was NVIDIA, the other was coffee, you wouldn't know the difference
Mhm.
between the two. The strategy is going to be the same, whether you're trading futures or stocks. The difference is it's done much faster. The trade is done faster in the futures market because it's leveraged. And getting back to what we were discussing
Mhm.
earlier, because you can trade anything in the futures market, stocks, bonds, currencies, and commodities, the benefit of that is that those assets do not necessarily go the same direction in price. So, for example, what's going on with the Dow Jones Industrial Average has nothing to do with what's going on with sugar,
Mhm.
right? Those
Mhm.
are non-correlated assets. So it makes it harder to be wrong on all of your trades,
Mhm.
right? When you're trading futures on any given day. Whereas in the stock market, the options market, the crypto market is the most correlated asset.
Mhm.
If you are wrong on one of your trades, you're more likely to be wrong on the others as well, because they usually do go the same direction in price.
Mhm.
Like if you've noticed, if Bitcoin is down today, the others like Ethereum and Solana and so on are likely to be down also.
Mhm.
Does that make sense to you?
Yes.
So that's my favorite benefit of futures because
Mhm.
you can trade anything.
Mhm.
It's a very good risk management tool. It makes it harder to be wrong on everything if you diversify your trades each day amongst the 4 types of futures.
Mhm. Okay. And so what does one consider when trying to figure out what asset to what to trade?
The first thing you need to decide is what your goal is. Are you trying to generate daily income, where you have income coming in each day? Are you trying to create weekly income? My personal choice, if your goal is weekly income, is the Forex market. So in the foreign exchange market, you're trading currencies. There's over 100 worldwide currencies that are traded 24 hours a day, 6 days a week in the global Forex market. One big mistake uneducated traders make who venture into the Forex market without any training is they try to day trade them like you would
Mm,
futures.
okay.
Well, the problem with day trading a Forex currency is it is so leveraged. It's leveraged 50 to 1.
Mm,
It moves like an accordion and it
mhm,
almost always stops you out before it goes your direction. So they don't make great day trading vehicles. Forex make really good weekly income vehicles. If you keep a currency open for a week or two, you can get rare 10 to 70 to 1
mm,
reward risk ratio opportunities. So you need to decide, what is it you're trying to do? Are you trying to create daily income? If so, futures or micro futures would be a good choice. If you're trying to create weekly income, Forex would be a good choice. You can also trade options for weekly income as well. To be honest with you, half of our students in our most popular program trade futures and Forex. So they day trade futures, so they have daily income coming in. But every week they'll set up one or two Forex trades in the background that they
mm.
keep open for a week or two.
Okay. Okay. All right. And so, okay, so this is our signature question, right? So we're all it's the Millionaire Playbook. So what I want you to tell me is, what is your version of the Millionaire Playbook? Like, what does that mean to you, the Millionaire Playbook?
Um, I would say if someone's trying to become a millionaire,
Correct.
at a very young age, start maxing out all of your tax deferred savings vehicles. So I have to create trade plans with students all the time. And I meet students in their younger 20s all the time, where if all they do is max out an IRA, so at that age, you're allowed to contribute $7,500 a year with the new tax laws. If that's all you did and got a conservative rate of return in an index fund, their accounts grow to over $20 million at
Wow.
retirement.
Mm,
Yet,
mhm.
young people are always the ones who do not want to do an IRA.
Yeah.
So start very young. I
Mhm.
meet people in their 50s all the time who already have hundreds of thousands in an IRA, but can't get to over $1 million because they don't have much time left, right? So that'd be my first advice to them, is to start at a very young age. When you think about it, $7,500 a year, that's not that much each
Mm,
month.
yeah.
If you can get in the habit of saving that and putting it into a conservative index fund, you'll have a lot of money saved at retirement.
Okay. Okay. And so where can people find you? Do you want people to find
Oh, I'd
you?
love
Do
for
you want
people to find me.
Okay,
So
awesome.
so if you have any interest in even exploring whether you want to learn how to trade or invest, I personally teach a workshop at our Overland Park location of Trade with the Pros. We usually do them on Tuesdays during the daytime from 10 to 12
Mhm.
and Thursday nights from 6 to 9. It's a remarkable workshop. You learn a tremendous amount. So I go through 8 common mistakes that new traders and investors make now, but you learn a lot also. So I teach you the core of our strategy in that workshop, and that's free. So the easiest way to register for that is just to go to tradewiththepros.com.
All right, Matt. Well, there you have it. Thank you so much for
No, you're
joining us
very
today. This
welcome. I
was
love
great.
this. I was so
Yeah.
excited when you told me about this.
Yes.
And again, you have such an accomplished resume
Thank
yourself.
you.
So I'll never forget when I first met with you, all the things that you had already done at the age of 31. And,
Thank
and
you.
I told you before this interview, I was nowhere near as accomplished at that age. So
I
you're
appreciate
doing
that.
great.
Yeah, I was trying to like be a little low key with my age, but
Oh no, I'm sorry.
no, it's
I didn't
fine.
mean to reveal
No,
your
you're
age.
fine. You're fine. Well, thank you so much. And guys, there you have it. Thank you guys so much for tuning in to the Millionaire Playbook, where we break down how to actually build wealth, take control of your life, and create opportunities on your own terms. We will be dropping new episodes every Monday, and we look forward to seeing you on the next one.